Hi everyone, Piers Bolger here, the Chief Investment Officer at Viridian. Well, here we are through the end of May, and once again, equity markets had another good, solid month in terms of performance. Our local market was up roughly around about 4.5% for the month of May. A lot of that was driven by the uptick that we saw in the small to mid cap part of the market, with the small caps up roughly around about 11% over the course of May. So a significant rally that we've seen in that part of the market. It's really continued on over the last couple of months. Globally, equity markets were also stronger. Global markets were up roughly around about sort of 4% as well. And again, we saw parts of that market also do relatively well, particularly again in the small cap segment, which has enjoyed a nice rebound off the lows that we've seen over the last, certainly over the last sort of 6 to 12 months. The REIT side of our market was again stronger. It was up roughly around about 7% for the month. So again, enjoying a nice recovery through the months of both April and May, particularly after a very, very difficult March period. When we look at the performance drivers locally, IT continued to be, as I said, the mainstay of the performance. The sector was up roughly around about 4.5% for the month. But what was pleasing, again, we had good contributions from all parts of the market. The only two negative sectors locally were the healthcare sector as well as consumer staples. So we're just continuing to see that rotation out of staples, particularly into higher growth parts of the market. And as it relates to healthcare, it's had a phenomenal rally. And, certainly we saw some profit taking, particularly as economies start to move out of the lockdown associated with COVID, and some of the issues from a healthcare point of view and the demand cycle that we were seeing there also start to mitigate somewhat. But overall, a really strong performance for equity markets, as I said, continuing on from the bottom that we saw through the back end of March. This month, we just thought it'd be worthwhile just showing you the performance of the Australian dollar, because equally with the performance locally in terms of our equity market, we've seen the Australian dollar also move higher. This chart here just gives you a snapshot in terms of the performance of the Aussie dollar versus iron ore prices. And iron ore has jumped pretty considerably over the last little while. We saw the ore up roughly around about 10.5 to 11% through May alone. And there was a few reasons for that. And the Australian dollar being a pro-cyclical currency, commodity-based currency, we also saw a rally in the Aussie dollar over that period. The said off roughly around about 15% off its lows, despite the fact that it's still trading roughly around about 5% lower calendar year to date. But again, important in the context when thinking about investing, that particularly investing in offshore markets, currency can have a big impact on the total return of your portfolio. So from our perspective, it's always worthwhile just keeping one eye on understanding potentially some of the key drivers and the mechanics as it relates to currencies. And certainly from an $8 point of view, really important on that front. From our perspective, we think there are a couple of key drivers at the moment that are assisting the Australian dollar. Not only, as you can see, commodity prices, particularly iron ore, some of our major export commodities have moved higher, but equally on the supply side, we've seen demand shift somewhat. Brazil, which is another big producer of iron ore, continues to struggle with COVID-19, and that's now having an impact in regards to its materials sector within its economy, and certainly some of its bigger mining companies. So it's been a benefit in terms of that supply side coming through. And then from a demand point of view, we are starting to see some better numbers coming out of China, particularly as it relates to the industrial and manufacturing side of the economy, and the expansion that is slowly starting to become a little bit more concrete in nature. So that again has been beneficial for the demand for commodities, and again demand for iron ore, particularly in regards to steel making and the like. So when we look at market performance, again, another good couple of months. So as we head into the back end of this quarter, it's looking reasonably solid. Valuations continue to remain relatively elevated in our view. So certainly in the context of performance in the near term, we wouldn't be surprised, as I said, if we have some consolidation at these levels, and equally potentially some level of pullback. But again, from an overall construct perspective, we think that the stimulus packages, both from central banks as well as on the government side, we believe will continue to provide a really good platform for equity markets, particularly through the second half of this year, as economies start to reopen, as corporates start to rebound, into 2021. And from an Australian point of view, we think that the market's well positioned. The economy is certainly ahead of the game in our view relative to the rest of the world. And we think that is continuing to drive investment locally, and we're seeing that, as I said, in the performance of our local share market, but equally just in terms of some of the opportunities we're seeing more broadly. As always, if you have any concerns about your portfolio, please feel free to reach out to any one of our advisors. And as I said, we look forward to catching up again soon. Thanks, and bye for now.